Hooty hoo, all my stock market gamblers. Welcome today. It's Friday. We made it till the end of the week. We got July 23rd today. What's going on in the markets? Well, I joke about it, but the markets only go up, right? We're up again about 150 points on the Dow. Now, what a wild week it was. I mean, on Monday, we dropped that 1,000 points, and today, by Friday, we're already hitting new all-time highs. It's just a crazy market, right? Well, the market doesn't go down. Now, why? Let's talk about this for a moment. What makes a stock go up? Now, I love when, you get Jim Rogers on CNBC and they ask him the question, Jim, why is the stock going down? He looks at them like they're an idiot. You know why the stock's going down? There's more people selling than there is buying. What makes a stock go up? More people buying than there is selling. Now, what if everybody is selling their stocks? Everybody's selling their stocks, but there's one buyer, and that buyer is the Federal Reserve. Which way does the market go? Everybody's selling, but the Federal Reserve is buying. Which way does the market go? Market goes higher. Now, a lot of people talk about what's known as the Plunge protection team. Now, a lot of people, they'd say that's not a real thing, Mike. There's no Plunge protection team. Well, actually, that's not the legal name for the group. It's called the Working Group of Financial Markets. And this is known as the Plunge Protection Team. It's actually legislated in. It goes back to 1988 when Ronald Reagan was president. Now, why did they put in a Plunge Protection Team? Once again, that's just the common name. The real name is the Working Group of Financial Markets. Now, they put in this Plunge Protection Team, legislated it in, because there was this Black Monday in October of 1987 that crashed the markets, and they don't want to see a Black Monday again. So they put in this thing called the Plunge Protection Team. Now, what does a Plunge Protection Team do? Well, technically, they just advise the president how to keep the stock market from plunging. Now, a lot of people believe that they also do buying of stocks when the stock market is plunging. So if the stock market's plunging, they go in and they buy stocks. Now, a lot of people talk about the Federal Reserve. Now, the Federal Reserve, they also have a trading desk. Now, when you ask the Federal Reserve if they buy stocks, they will tell you no, because it's not legal for them to buy stocks, technically. Now, up until the great pandemic that we're having, the Federal Reserve was only allowed to buy treasuries. That's all they were allowed to buy. But the Federal Reserve is allowed to buy a lot more now because of the pandemic. They call it an emergency, right? They're allowed to buy corporate debt now. What else are they allowed to buy? They're allowed to buy mortgage-backed securities, not just treasuries anymore. So the Federal Reserve is buying treasuries, about 120 billion of them every month. Economy's so good, they have to go out and they have to buy $120 billion of these treasuries. Okay, what else are they buying? Well, they're admitting they're buying $40 billion of mortgages every month. Hottest real estate market in the history of the United States, and they have to support it by $40 billion. $40 billion of taxpayer money to go out and buy these mortgages. Okay, so they're buying these mortgages, they're buying these treasuries. Now, are they buying stocks? Well, they do have a trading desk. You can Google it. Just Google Federal Reserve Trading Desk. It's at the Federal Reserve of New York, their trading desk there. Now, what do they do on the trading desk? Well, they trade. Now, are they trading stocks? Not necessarily. What I think they're trading is derivatives. And that's why Jerome Powell can go on TV and say, we don't buy stocks. Maybe they do, maybe they don't. I don't know. I think they do it with derivatives. Derivatives. What are derivatives? They're like buying options on stocks. They're like going into the futures market and buying contracts that are big. They're big contracts on the whole stock market as a whole. So when the stock market's plunging, let's just say that there's a code word. They call up the trading desk with that code word, and you guess whatever the code word is. But when they hit that code word, that trading desk, they start to buy these future contracts, these derivatives, and it just pumps up the market. So if everybody's selling and the Federal Reserve is the only one buying, which way does the stock market go? Stock market goes higher. Now, I believe that we had the Plunge protection team come in on Monday of this week and boost the market back up to all record highs already, right? Okay, so we have that big 1,000-point drop. Plunge protection team comes in. They call the trading desk with the code word. Then the trading desk starts buying. They start buying the derivatives that drive the market higher. All right. So this is what I believe. This is how I believe that it works. Now, they work very closely with Citibank and JP Morgan. Why does the Federal Reserve work so closely with these? Well, these are the largest derivative holders. They are the risk holders, and they cannot have these banks go under. Now, eventually, it's going to happen. Eventually, the dollar is just going to become so worthless. But right now, the Federal Reserve has on their balance sheet that they're admitting to $8.2 trillion. Now, here's the secret. As their balance sheet expands, and I believe that $8 trillion is going to soon be expanding to $16 trillion. I believe it's going to do it in a year or two. They're going to keep buying assets, keep buying these mortgage-backed securities, keep buying treasuries, and keep buying corporate debt. Do you know they own corporate debt from big companies like Amazon, like Apple, and little companies? They keep these zombie companies alive by buying their corporate debt so they can stay alive. Now, it's just a wild, wild west out there. But the economy, well, it's artificial, and it's become dependent upon a stock market that's artificial and on a housing market that's artificial. The Federal Reserve keeps buying assets. Okay, so they go from $8.2 trillion to $16 trillion. What's going to happen to the stock market? Is the stock market going to go down when they buy another $8 trillion worth of assets? I don't think so. I think the stock market's going to go higher. Now, the Federal Reserve could do the right thing and stop the money printer like they're going to do with the unemployment. They're going to stop the money printer. Maybe forbearance is going to come to an end. Maybe the eviction moratorium is going to come to an end. And this could put another plunge down in the stock market, but this Plunge protection team is going to prop it up. So now what am I doing in the stock market today? After all this talk about how the stock market only goes higher, I put on a trade again. I can't help myself. It's at a record high. The XLK, this is technology index, and once again, we're at a record high. We're trading 25% above the 200-day moving average. I put on a couple puts. I'm a gambler. I'm a stock market gambler. That's what I did today. I put on some puts on XLK. What else did I do today? Well, I bought the GDX. These are the gold miners. Okay, gold is not doing very well. It's underperforming. Now, people say, Mike, why would you buy the GDX? Gold's not going up. It's going down. Now, gold is not performing well right now, and I'll tell you why. All assets are in a bubble right now. We got the stock market in a bubble. We got the real estate in a bubble. We got treasuries in a bubble. Now, what are they in a bubble against? They're in a bubble against gold. Gold is real money, and that's why gold is not going up. But when these bubbles, and they will pop eventually, when these bubbles start to pop, you're going to see the GDX could do a 10x, not just a double. The whole index could go up 10 times. 10x. That's when the bubbles start to pop. Right now, we're inflating the bubbles. The Federal Reserve is inflating the bubbles by buying trillions and trillions of dollars in assets. And they're going to continue this process. They're at 8.2 trillion right now, and I believe they're going to go to 16 trillion within a year or 2 years. Just mark my words, the Federal Reserve's balance sheet that they're admitting to is going to go to 16 trillion. So what's going to happen to the stock market? I do think it will melt up, but maybe we get another plunge. Maybe my XLK comes through again. It came through last time. Maybe the puts will come through. I bought out till September 17th. Puts. Same with the GDX. I'm out till September on those with the calls on the GDX. That's just what I'm doing. I'm a stock market gambler and I love this stuff. I love talking with you guys about this stuff, and hopefully you enjoy it. Hopefully you get some value out of this. If you do, you got to give me that thumbs up. It's Friday. Give me a thumbs up today. If you really like it, punch that subscribe button so we can talk again next week and see how we're doing. Seeing if the stock market keeps going up. But keep your eye on what the Fed is doing. If the Fed keeps buying assets, the stock market's going to inflate higher because that money has to go somewhere. It has to go somewhere, and it finds its way into the stock market, and I believe they're going to keep buying assets. I'm Tall Mike. Get out there. Have a great weekend, everybody, and we'll talk again next week. Bye-bye now.